Hello and welcome to the Movers and Shakers podcast. My name is Gino Barbaro, one of the co-founders of Jake and Gino, multifamily investor, educator, father. And with me today is Isaac Lewis. Isaac has more than 10 years of experience in real estate and a solid background in marketing. As a second-generation investor, he has a deep passion for real estate. Isaac lives in Boise, Idaho, with his wife and actively invests in properties across the United States, including Kentucky and Idaho. He currently manages assets with a value of over $12.5 million. Welcome to the show, Mr. Isaac Lewis.
Thanks, Gino. I really appreciate it. I'm happy to be on here.
First one, right, my friend?
Absolutely. Yep.
I'm going to try my best to make it as memorable as possible, Isaac. And
it's
listen,
Gino, and it can't not be memorable with you, Gino.
Listen, you joined Jake and Gino 18 months ago, and you told me it took you about 18 months to find your first deal. And that's amazing because Jake and myself took 18 months to find their first deal. I'd love to ask you what that looked like. But before I do that, what was the reason? Why did you want multifamily? Why did you want real estate in your life?
Yeah, well, there's a lot of background to that, Gino. And I'll start from the beginning. So basically, I was born and raised just south of Louisville, Kentucky. It's a really small town, 30,000 people. But I was fortunately able to be born into an investor family. So I'm second generation real estate investor. I grew up in a lot of my dad's rental properties. So I did the whole house hacking thing as a kid. Even lived in a couple mobile homes as my dad bought mobile home parks. And the number one thing, though, is that he really instilled the rich dad, poor dad lifestyle into me at an early age. So he was definitely the rich dad in the book, if you've ever read that, by Robert Kiyosaki. And so he instilled the importance of like just acquiring assets, living below your means and for a greater purpose, rather than just 9 to 5, cash in, cash out type thing.
Mm-hmm.
And so it really lit a fire under me growing up to want to achieve true financial freedom for myself through real estate. And so after college, when I moved to Boise with my wife, I started to get more serious about investing and did a ton of research, underwrote a ton of deals, and really was just fumbling through it. I kind of knew how my dad did it, but he fumbled through it as well. So it was just kind of like we were both kind of fumbling through it, and ended up buying a single family house in Kentucky in that small town. And I really spent quite a bit of money trying to rehab that thing, trying to get it ready to rent. And I tell you what, it was a pain in my cheeks. I hated every second of it. The whole time I'm thinking, man, this sucks. And even after I rented it out, I just wasn't content with where the trajectory was going. I'm like doing the math in my head, like, how is this going to make me financially free? I'm looking at $100 here, $100 there. I'm like, I want to be 1,000 years old before I get any sort of sense of freedom.
So Isaac, this is interesting because your idyllic memory of your father crushing it and doing these amazing things, it's not translating into what you're doing, correct?
Absolutely not. No. So there's a huge disconnect. I'm like, wait, how does it 1 + 1? I'm like, so basically, around that same time, I was introduced to a webinar where a guy was literally just pitching a big apartment building deal. And I'm sitting here just like 21, 22 years old. My eyes are just getting wide. I'm like, holy smokes. And so then I just like got so into it. I attended a conference right after that for the same thing. Mm-hmm. And I'm like, I want to do that. I want to get into those big deals. But I knew something very, very important about myself. I needed help. I could not do it on my own. I've always needed help throughout my life, whether it was my dad, mentors. And so that was the number one thing. I'm like, I need help. And so I interviewed a couple of groups, having conversations with different ones, Rod Cleef, Michael Blanc, and actually had a conversation with you and Dylan. And I just knew that, like, man, we just had a connection right off the bat. Wasn't trying to sell me. You really just wanted to build a connection with me. And it was funny because you were like at the time one of the only people that was illicitly or explicitly doing deals as you were teaching. It wasn't just like, oh, let me make some cash on the side. So yeah, in 2022, summer 2022, I joined Jake and Gino. So
let me ask you, Isaac, why do you think most people out there don't have the relation you had at 22 years of age. They think they've got to go out and buy a house here and a house there. And why do you think they just don't skip and go to multifamily?
Well, I think number one thing is limiting beliefs, and you talk a lot about this. I've learned a lot from you around limiting beliefs, and there's a scalability and a chance to make serious money with multifamily, and it's just when you're thinking about it and you're looking at deals that are 5, 10, 15 million dollars, even if it's just a few zeros at the end, it makes like it's unfathomable to normal people and even myself at the time. And I was thinking, as I was underwriting those deals, I'm like I'm going from buying $160,000 house to looking at deals that are 3, 4, 10 times that size. And yeah, it's just it's a trigger in your mind, and I'm thankful that I have a very um, ambitious learning mindset to be able to want to, like, okay, how can I push myself? How can I learn? And that's really what it is, the education aspect, to be able to get past those.
And you're in the community. I know you're coming to all the events, and this is something, a disclaimer that I should put out there. You can join any group you want. The group is not going to make you successful in as much as you hold yourself accountable. Isaac is living in Boise, Idaho, beautiful part of the country. It is a pain in the ass to fly anywhere. You got to take like 17 flights to go anywhere. It stinks. But Isaac gets on those flights. He comes out to all of the events. He's one of the youngest guys in the community. It's got to be really nerve wracking. You're just there by yourself. You don't know anybody. You don't know the education. You're being overwhelmed with all of this. You're drinking from a fire hose, basically. But yet you show up, you come to all the events. So the disclaimer is I want you, whoever's listening to this, to make the commitment. But once you make the commitment, that's just when the work starts. It's almost like buying a deal. The commitment is once the deal is done, then the hard work starts. It's actually managing the deal. And it's the same thing with investing in yourself. Investing in yourself is very difficult, but taking that next step, putting in the hard work, getting on those planes, coming to these conferences, coming to these boot camps, getting on Monday lessons, talking to the coach every couple of weeks, then start networking. That is where I think the magic really happens. Now, 18 months to find the first deal. What did that first 18 months look like for you as you're joining? What are you going through? What are you learning? What's holding you back? What are you excited about?
Yeah, before I even joined Jake and Gino, I one of the main challenges I was having was really clarity. And
Mm.
like I said previously, what was possible? And I'm sitting here looking at little deals, and I didn't have guidance. I didn't have that clarity, and most importantly, I didn't have the mentorship that I really needed to get me into the next level. And so, getting to rely heavily on the coaching of Jake and Gino was very impactful. Now, during those 18 months, so once I joined Jake and Gino, um, it was a long, frustrating, and impatient time for me. I'll tell
Yes.
you that.
Well, yeah, because
Um,
you're in a market right now where everyone's doing deals. Like there's between 2022 and 2023, a lot of them aren't good deals. They're bridge deals. You're probably happy that you didn't do them. But I can feel the frustration. Like I joined, the market's euphoric. I'm hearing everyone doing deals around me. The Jake and Gino students have closed over 80,000 units. When is it my turn? I need to get there right. So that's got to be the frustrating part, isn't it, Isaac?
Exactly. And you think about it, when I first joined, right as like the market's going back up after COVID, and so like
Yes.
everything's rising, and I'm like, well, I'm missing out. I'm missing out. Like, what am I? When am I going to get a deal where I can actually take action? And so I spent 18 months of just underwriting deal after deal after deal. Nothing's working out. I'm pencil whipping these deals, and Senate saying no, 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 and I'm just like I'm going through. Lots of periods of time where I'm just questioning myself of like, is this right for me? Am I even going to make it? I'm 23 at the time, I guess. And so I'm like, am I too young for this? Um, yeah, should I quit? Should I do something else? And so that time ultimately allowed me to continue to hone my skills, make me a better investor, operator, and capital raiser, and building those key relationships so that when the time came for the right deal, the right partnership, the right relationships, I was in the right spot at the right time. And yeah, patience is hard for me, but it was a long, grueling, fun 18 months.
And Isaac, I know you come to all the events because that's a Bill Hamism. Pencil whipping a deal is made famous by Bill Ham, which simply means that you're forcing the deal. The numbers are the numbers, and you're trying to massage the numbers. Rent growth is 15% when it should be 5%. Expenses are growing at 1% when they should be growing at 4%. All of that, you're pencil whipping deals and trying to make them work out. And it's one of those things where you feel as if you're missing out. And when you get that first deal, well, walk me through the buy right, the manage right, and the finance right. Let's educate the listeners upon what you think that means to you and what your buy right criteria is. And it's different for everybody else, but this is crucial. This is what the mentorship is all about. You need the frameworks. You need, as we say, guardrails to keep you from going off and actually pencil whipping a deal, whether it's from buying it or whether it's financing it as well.
Yeah. So that those three pillars are what you guys are known for, just like curating and really honing on, like the three-legged stool. And that's something I didn't really. I mean, I knew in the back of my head. Because my dad's always bought like very, very well. And that's what's honestly made him successful, just because of the way he bought. But I needed that. I needed to expand on those to be able to understand, like in the big deals, what is a buy right. And so I spent a lot of time, months actually working with Senate, who is my coach from Jake and Gino. And I spent a lot of time figuring out, okay, what do I want as my criteria? And I'm going to be honest, it changed probably every week. I was like going back and forth. Okay, maybe I do this deal. Oh wait, I'm getting a little confidence. Let me move the number of units up a little bit. And what it came down to was like, what is going to be the best for the long run, not necessarily what my beliefs are at the time. And
Mm-hmm.
so wanting to, like things like wanting to make sure I had enough units so that professional property management made sense, so that I didn't have to go in and not knowing much about property management, and to the extent that a professional would, and being able to manage those properties, thus creating less cash flow for me. And
Mm-hmm.
the term I'm gonna do it for that you term all the time. I'm gonna just do the property management. No, that's not right, because I'm gonna mess it up type thing.
Mm-hmm.
And so
Yes.
um, yeah, so wanting to make sure like those type of things when I buy, making sure that the numbers work. In terms of the financing, it really just comes down to what makes the deal work the best. And what I found was, and this is part of the story I can tell about how we did the financing for this 24 unit, but um, it was building relationships with the financing, because I mean, in this market, financing is hard. And getting the deals to work, like I was looking at deals last week, and I'm looking at like 500 to 700K below asking for it to even make sense. And it's
Mm-hmm.
like with these deals. So part of the financing was like building those relationships so that longer term debt made sense, not the bridge debt that's going to end up getting a lot of people in trouble like it has been,
Mm-hmm.
as well as good interest rates, because they know we've built that relationship. They know and trust me and the team to operate those properties. Um, and then the whole manage thing, I'm going right back to the property management, is getting someone who's a professional in there who can operate the property better than anyone in the market. They know the market well. And so being able to have the buy right tie in with the manage right, so that whenever I buy, I'm looking at the end, not just is it going to be a good deal, but I'm looking at the end of like the management as well as the exit. Who's going to be on that team to be able to help me execute the best way possible. So
That's awesome. I want you to share a couple of challenges you had with the deal. A couple of challenges, maybe yourself personally, maybe like you said, your mindset or the deal itself. Was it hard to close? Was it hard to raise the capital? Was it hard to pull the deal through? What challenges did you have during this deal?
in the deal, there really weren't. Let me see. In the deal, there really wasn't a lot of major challenges in terms of the actual um, property itself. The main thing, like I said, was coming down to the actual financing aspect of it,
Mm,
because rates were high, rates were changing by the day, and there was no like true rate locks because the banks couldn't really rate lock properly, at
Mm-hmm.
least for this deal. And so the major problem that we had. So a little backstory: this deal that I'm doing is a 24 unit in the Twin Falls MSA of Southern Idaho, and very 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 hot market. Just an hour and a half ish southwest of Boise, and so there's a lot of overflow there and a lot of connectivity, and so very very hot market, very very high pricing in terms of homes, and so we're getting a very good deal on this property, and so um, we wanted to make sure that we can make this deal work. And so uh, the main problems we had wasn't with the brand new build because it was built in 2024. There's no major capex, no major like, oh, we're going to worried about this, that, and the other. It was the capital raising, the financing, and getting the money to flow because people are terrified. They're waiting for the bubble. They're waiting for this. I mean, if you listen to Bill Ham, you have no fear in the market because you know where the markets are going.
Yes.
But yeah, the capital raising because just getting people to trust that this market is still a good market. And when the developer developed a property, once again, not really good property management skills in place, and so he just filled it up with pretty low rents, and so when you're looking at rents, they're at 1,400, and the market is around 1650. So that's a pretty big jump, but he was just desperate to get someone in there, and that was the main kind of opportunity we saw in terms of increasing the revenue of the
Mm-hmm.
property. And when we were pitching the deal, we got so many things of like 1,400 to 1,650. That's one really risky, and two not quite plausible.
Yes.
And so we had to kind of mitigate those concerns throughout the whole process because we knew the market. Senate is from that area. Chris Carney manages 400 units in that area. So he knew the market, and that was an advantage to us. So
Mm-hmm.
we knew that we could get those rents to that thing. It was just a matter of conveying the story to the investors so that we could have them have their buy-in. And then once again, the financing came through the relationships we had. We got fixed debt, 12 months of interest only, which dramatically increased our revenue, especially in the beginning, as
Mm-hmm.
well as 7.75 interest rate. So
Mm-hmm.
pretty good in this market, especially for long-term debt. And so we were very fortunate to kind of have that play out.
There's two things that I like to point out to the listener. And Isaac has been part of the community for 2 years, and we talk about buy right criteria. Right now, the opportunity in this part of the market cycle is buying newer assets. Now, they obviously bought a brand new asset. There's the opportunity where these developers are strapped for cash. They've got another deal coming on. They can't finance their next deal. They've got to exit this one. They've put in renters where it's below market. That's really important. And the second component in this part of the market cycle, it's not valuation just through renovation, it's valuation through operation. So as you can see, you've got the buy right criteria. It's constantly changing because the market cycle is changing. Finance rate changes as well, but you still understand the basics of finance. If you can put both of those together and you buy this asset properly and you have it financed properly, then all it is, it's about the manage right. And you say you have the team member, Chris, who's able to manage these assets. That is awesome, Isaac. Now, if I'm listening to this and I'm either young, old, great job, not a great job, and I want to get into multifamily, what are some of the next steps that I should be doing to get into the multifamily space?
I think number one is definitely, I mean, to get into the multifamily space when you're young or just getting started is really obviously education because education is the foundation of everything. Um, Experience can come next, but I think it should come later because you really need that education, the foundation, and then the building the relationships. You don't need. I mean, when I first joined the community, I was 23 ish, 24 maybe, and I'm going in, and there's a lot of limiting beliefs when you're a young guy coming in, and all these people are doing deals, and feeling like, oh, how am I going to build a relationship with someone like this person? How am I going to add value to benefit them? But really, it just comes with that consistent relationship building, so that when you're able to build those relationships, everything else will fall into place. Um, Not getting eager to just take on get the first deal, like pencil up the deal and get it under contract, but really focusing on making yourself a better operator, better investor. What are the skills you need to do that, so that the opportunities will come? They'll fall right in your lap. I mean, it did for me many times in my life, and so being patient and really just trusting the process. I mean, Jake and Gino have put a wonderful program in place. And they say, I mean, the program is approximately 2 years for a reason. It's a long process. It requires patience, but that 2 years, 18 months to 2 years, is really the the nurturing time for yourself to kind of get in the deal and just have fun. I mean, enjoy the process of getting to know these awesome people. Because I mean, if you're investing in real estate, you got a good head on your shoulders.
Hmm. Isaac, it only took you 18 months to get lucky. What can I say? I mean, there's a lot of hard work that precedes the luck. If I remember meeting Jake in 2009 and I was going through the education and the mentorship, and I got lucky that I met him, then I got lucky that he moved to Knoxville. If that had all happened, I wouldn't have been lucky because I wouldn't have had the opportunity to provide value for Jake. So it is preparation. Proper preparation prevents poor performance. And I was able to put all that hard work in. And then when an opportunity arises, we want to call it luck, but it's not luck. It's just you properly preparing and you honing in. And then all of a sudden, wow, a deal fell in my lap. The deal didn't fall in your lap. You understood how to attract that deal into your lap. That's the difference. Now, what do you see yourself in your future? What are you trying to focus on now going forward the next 5, 10 years?
Well, I'll say one more thing on what you just said in terms of the luck. You make your own luck, and so when you're putting in all that work, it comes back around, and you're able to position yourself in the right place. But for me, what's next in my journey and where I'm heading is really, I keep honing on the building relationships thing, but that's really, I mean, going from a scared kid. I'm still a scared kid. I mean, we're all scared kids, but
I
going
am
from a
too.
going from a scared kid joining the group to even where I am today is just completely different. So, I mean, tomorrow could look 100% different than it does today. But basically, where my head is at is I want to continue to build relationships, because that's what's paid off for me. And I keep harping on that, but that's really what it is. And practically what that looks like in building a relationship is just adding value and being intentional. It's very simple. It doesn't have to be some fancy, you're not coming and proving that you can do this, that, and the other. It's really just intentionality. And so my goal in terms of the next season is continue to search for deals, and building those relationships so that I can have situations like this deal where they're brought to me off market, not on market, because I mean, it would have never worked. We got this deal when we bought it. We bought it for 5.1. We bought it for 5.1, and then 2 weeks later we had the appraisal at 5.4.
Hmm.
So it's just already instant equity, and that would have never happened. It would have gone way over if it went on market.
Hmm.
Don't tell the seller that, but um,
I won't.
yeah, um, but yeah, and so just hunting for those deals, and really, I've found I have a background in marketing, and I've learned a lot through marketing, and so I really like the idea and the process of capital raising, and so that's where I find my bread and butter. I I enjoy the talking with investors, sharing, educating, and so that's where my passion is, and I'm going to continue to do that so that I can. Really, my goal is to help more people become financially free. It's no one cares about the money. Yeah, you can have $1 million, but if you're not free, no one cares,
Hmm.
even that person. So, um, I think helping people, educating people, getting to that next level of freedom is a huge passion for me, and that's what I'm going to strive to do. So.
Isaac, before you give out your contact information, I want people to understand. The seller got a good deal. It may be worth what it's worth now because of the value that you guys are putting into the deal. But at that point, when he sold, that's what the marketplace said it was worth because the rents were suppressed. He probably had some vacancies. He probably had some delinquencies. He was thankful to get rid of it and to be able to sell it to a group that could actually execute. So you can look at it both ways. Well, the seller didn't get as much as he thought he would ever. He looks at the appraisal now. The appraisal is just someone's opinion of what they think it's worth now. He's thankful. He needed to exit the deal. He found value from you guys, and you guys provided value to the seller. Now, where can the listeners get a hold of you?
Let me mention something on that, Gino.
Sure.
That seller actually, because of the relationships we had with them, ended up reinvesting into this deal. So he took the capital that he made off of
Uh-huh.
this money and reinvest to get we're about 2.3 times his money at the end of the deal at the 7 year mark.
Wow.
So it is honestly a win-win for everyone because they're investing. And then I also want to touch on one thing. Um, you didn't mention this, but I want to talk a little bit about how my business has been different today since I joined Jake and Gino.
Sure.
And if I hadn't, because I think that's really important for people. And you're not holding a gun to my head. I'm just saying this out of free will. And I actually think about what my life would look like if I hadn't joined Jake and Gino quite often. And I think I would still be thinking small and I would still be trying to get those little deals and not have my mind open to what it is today that the program has offered me. I mean, I'm incredibly grateful for what the group has done for me, and I wouldn't be half the man I am today without it. And I'm not just saying that. The investment in the academy has honestly been the best investment I've made through the relationships. And I mean, I'm still friends with people. And I last week I talked to a guy that I met at my first Jake and Gino event,
Mm.
and just building those. And I mean, I have great relationships from that. So um, yeah, just wanted to say that. But
Thank you.
how listeners can get a hold of me? I'm available and active on all social medias at I am Isaac Lewis, 2 A's, 1 S, and yeah, I'm happy to connect and hop on a call with anyone who's wanting to learn or just connect. So
Are you brave enough to throw your cell phone out there?
yeah, sure. It's 270-268-8987.
We have a young Isaac Lewis riding around with his pops. His pops is fixing and flipping, running and gunning. He's figuring it out. He's putting it together. He's even every now and again living in a mobile home park. Yeah, hey, you got to do what you got to do to put food on the table. And it's one of those things when you start reading Rich Dad, Poor Dad, that's just your mind completely starts to shift. And it becomes part of who you are, becomes part of your lifestyle. You want to build something. It's not just about the money. It's about the autonomy. It's about the freedom that Isaac mentioned. Moves to Boise, Idaho, starts off his journey with a $160,000 home. That's where a lot of us started. I started out with a $60,000 duplex. You think it's the right investment, and it is the right investment when you start. The key is to start and not to sit on the sidelines and to think, what should I do? It's okay to start. You start out, you make a few mistakes. You say to yourself, holy crap, $100 a month on this cash flow. I'm going to need 1,000 years to close it to become financially free. This is not the path that I chose, but it's okay. I've learned this is not what I want. What I do want is when I get on this webinar and I listen to this person talking about multifamily, wow, there's just a little bit of difference. There's some more zeros. But it's really myself. It's my limiting beliefs that are holding me back. How do I take myself to the next level? The thing with life is you need to be able to ask yourself the right questions. If you can ask yourself the right questions, you'll start getting the right answers. How do I get into a multifamily deal? Well, let me join a community. Let me start creating relationships. Success leaves clues. Let me see what other people are doing. Let me see how to provide value. Let me create that foundation that I was talking about with the education. Once I have that foundation, then I can speak intelligently and I can create my buy right, my finance right, my manage right. And after 18 months of hard work, Lady Luck drops a deal in my lap, and I go to work and I partner up. The deal's not pencil whipped. The deal makes sense, and I close the deal. The sky's the limit, and I'm looking forward to this multifamily journey. Isaac, thank you for being on the show. I appreciate it, brother.
Thanks, Gino.